everyone, it's Angela and Colleen from Homes and Loans. We are here with a new episode, and today we're giving advice for sellers, okay, from the loan side and from the real estate side. So, welcome, Colleen.
Hi, everybody. How you doing?
So, Colleen is our, on-the-spot loan officer. If you've been listening, if you haven't been, you need to be. She gives incredible advice regarding the loan aspect of everything here in Orlando.
As you do on the listing side.
That's true. So, again, I've been a realtor for over 20 years. And we've been working together for almost 20 years, I feel like. So it's been a long time. So we are here to give you the best advice possible. Today we're talking about advice for sellers, especially in a market where we are currently in the first half of those alarms. She's supposed to be down here already. We're talking about the current market in the first half of 2026. And so there's a lot going on as far as, other things regarding oil prices and wars and, media and AI and just like a million different things in this world right now. So we want to give you the best advice that we possibly can. So I'm going to start off by saying the two things that I'm seeing are hardest for sellers right now are one, days on the market. They're still expecting an offer in the first week, and that's just not happening. I've shown properties that are like literally move-in, perfect, staged, beautiful, and they're sitting on the market 40 days and
they're like, why isn't my house
what's
selling?
going on?
Yeah.
And even they're surprised.
Right.
So, the average days on market is easily between 50 and 70 days, and most sellers are surprised when I tell them that, but that is the truth. So just they need to adjust their, expectations for that. So that is one thing that we're up against, the time frame. So again, if you're thinking about selling, you really want to start now because it could take a couple months before
we're
you close.
in spring.
Yeah, we're coming.
This is a
we're in
very
spring. This
hot
is really
time.
when you want to do it. And the other thing is interest rates. So we talked in a past episode about what builders are offering versus what actual interest rates are. And so as a seller, you really have to be aware of what the best concessions are to really, present your listing in the best way possible. So Colleen is going to tell us a couple things that she always recommends when dealing with my listings and sellers in general. So a couple of those.
Well, one thing you can look at offering is the temporary buy down.
Yes.
That's the one where the interest rate is lower for the first 2 to 3 years. And that incentive is usually offered by the seller.
Yep.
So versus doing a price reduction, the seller could offer to do the temporary buy down. So let's say today the rate was 6%. So if you did a two-year buy down, the first year would be 4%, the second year would be 5%, and then it would go to 6%.
But you're still maxing out at the 6%. So you already know what your worst case scenario is going to be. Just so you guys understand.
But it's just giving you a little bit of It's giving you a lower payment for the first 2 to 3 years. To kind of ease your way into that payment. But then you will always have the option to do a refinance within that time period. So let's say rates do drop in the 4s or 5s and you want to refinance and get yourself out of that program.
And just get into a standard
30-year fix. You always have the option to do that. Yeah. That's one thing. The other thing we can do is our list and lock.
Yes, I used to do this a lot for people. So as a listing agent, the list and lock, we work with Colleen.
So we determine how much the seller's going to contribute as a seller concession. CMG, the lender, would offer 1%. So if the seller was going to do, let's say, 2% and we do 1%, then we're going to offer a 3% a permanent buy down on the interest rate. And that is paid by the seller.
Yes, not by you as a buyer. So again, sellers, just so you understand, this gives you the opportunity, and she gives us a whole breakdown sheet, right? So just so you're understanding, as a seller, you would be paying 2% of the loan amount or sales price.
It's the sales price.
Okay, of the sales price. Okay.
And CMG would do 1%.
They would match it with 1%, so that you're giving a total of 3% of the sales price is going to be given to the buyer to buy it on the interest rate.
And that could save you about 0.75% to 1% in the interest rate, which would give you a lot more buying power. So if you're getting a 3% buy down on your interest rate, which is permanent, that could make a significant difference in your monthly payment.
Because sellers, you have to understand that, say the regular rates are 6.5%, but you're selling your house and we're doing the list and lock and we're advertising this program, you can offer a rate of 5.5%.
Correct.
Which buyers aren't going to be able to find with anyone else. But again, they have to use Colleen because you're paying to lock in that rate ahead of time, essentially.
And we are actually one of the only lenders that offer that program out there.
So that's another good one. So just to recap really quickly, we have the 2-1 buy down where you have the interest rate at 1, then it changes the second year, then it locks in. Okay, so you have a little bit lower, a little bit more, and then you're locked into the fixed rate. That's a great option to ease people into owning a home, right, and starting out with a lower mortgage payment. And then we have the list and lock, which again gives them that fixed rate lock that,
Right.
for the whole life of the loan of 30 years. And, you're essentially buying it down from them for them. And so it's just a great opportunity to differentiate you as a seller.
And you can market it that way in your listing.
Yeah.
That seller agrees to pay up to whatever at a rate of, obviously the rate's going to be
depends on your credit.
Dependent on the program,
and the loan,
the program, the credit score. So if we have that 3%, though, that's going to make a big difference in the interest rate.
And that's important for you to know as well. It doesn't lock you into having a buyer that's only FHA or VA. It applies to whatever loan they qualify for, whether that's FHA, VA, or conventional. It's still just going to buy down that rate for them.
Right.
So it works in every scenario. And the last thing is an optional lender credit that we can offer with Colleen as well.
So with all of our business partners, we will offer up to 1% with a max of $2,500 lender credit for any buyers that come to your listing. So you could use the lender credit plus seller concessions as long as we stay within that cap that the program allows, whether it's 3% or 6%. So that would make a significant difference in your monthly payment too with getting a better interest rate.
So again, just to explain it from a seller aspect, I already work with Colleen. So basically you would be saying, okay, I trust you, Angela. And if you have a good working relationship with Colleen and you want to do that, great. And then what happens is inside the listing, we write, at the bottom, seller requires buyers to get qualified with Colleen Mitchell. Okay. And in doing so and doing the loan with Colleen Mitchell, you'll automatically get a $2,500 credit towards closing costs. Okay. That's just off the top. That buyer can still make an offer and ask for more to buy the interest rate down to cover closing costs, but you're already giving them an incentive by working with someone that we know and trust, right? And so off the top, they're getting $2,500 towards closing costs. And she's going to shop the best rate just like it would anywhere else. It's not like there's anything else happening behind the scenes. It's just an advantage for working with Colleen. And, again, she can use that to buy it on the interest rate as well. So 3 great options of ways to advertise your property without doing price reductions.
And that's kind of the market we're in. We have to market. We have to
have
come up with some creative ways to try and get some of these listings under contract.
Yeah. Because with days on the market, and even though interest rates are not terrible, it's the fear and the hesitancy that buyers have. So if you as a seller can differentiate yourself and give them these great options of any one of these things that most likely they are not aware of.
Right.
So, and you have an agent that's really going to advertise and show you all these great options you could do regarding buying down the interest rate or doing the lender credit. I mean, that's what's going to help them, and it puts you in a much better situation. So that's our advice. Yeah. Any other little snippets you want to add about those different programs?
No, I mean, you've covered them. I mean, really, there's really...
Well, there's so many different programs. There really is. I mean, and you know what? We're going to touch on really quickly. This is separate for sellers, but I mean, we're talking about the different options you can give buyers to really help them out with the interest rate. But another great program that Colleen now has is the doctor program.
The doctor program.
Let's try and bring those high qualified doctors in, and we'll let you explain how that benefits.
We just rolled out what we call our Med Pro. So there is a list of doctors that would qualify for it. I know MD, I know there's a podiatrist, there's veterinarian. So it's very specific to doctors only, no nurses, because I've already gotten calls.
What about PAs? Physician assistants?
Yes.
Okay.
PAs, so it's 100% financing, no PMI.
Guys,
up to $2 million.
That's as good as it gets.
Yeah.
100% financing and no PMI. You don't even get that with a VA. I mean, I guess
right.
VA is the only one.
Yeah, exactly.
Does that go up to $2 million, VA?
Well, it can go up there depending on your
Okay.
eligibility. I did one at like $1.2 million. So it just depends. But yeah, so it's 100% financing, no PMI, minimum credit score 680, and it does allow a cosigner.
Yeah, that's amazing.
So it is a great program. So if you have anybody that you might think is interested in that, please feel free to reach out. There's also a different formula for student loans. So, student loans, especially when you're just getting out of school,
yes,
those payments can be pretty significant, or they're on income based or whatever. And then we also will work with if they're a new resident and if they have a contract and they haven't actually started yet. So
If they
there's
just
a
have the
lot.
contract signed, but they
Yes.
haven't started yet.
Exactly.
So you're going to allow that as well.
So there's a lot of creative options with that program. So yeah, we're super excited about it.
I'm
And the
super
rate's not
excited about
bad. I
that.
had somebody price it out, and I think it was close to 7%, but with no PMI, it's kind of a no-brainer.
Yeah, it
So-
kind of works out the same if you think about it.
Yeah.
And I think that's another thing that first-time home buyers don't understand. When you say PMI, they don't even know what that is.
Private mortgage insurance.
I know, but I mean, they don't know
Yeah.
what it is. And then
Yeah.
we're sending them the estimate
Exactly.
from you. And they're like,
like,
what
"What's
is this
this?
fee and
What is this?"
tax
Yeah.
and HOA and PMI? And how come they're just seeing
Yeah.
that first number and they're like, what are all these other numbers? So again, just another great thing to be able to make sure that if you're not working with us, and please, or you have a family member that is buying or selling, just share this information with them. Tell
Absolutely.
them to listen to the podcast, because we're trying to provide valuable information to you guys to help everybody. I mean, that we love what we do, and we're here to teach and help and just, be a resource to the community. And that's really our goal. We really enjoy that, but it's knowing and sharing that information with others. Like, oh, did you know there's a doctor's program? If you have someone that's just getting out of medical school and wants to buy a house and is newly married and just took a job here in Orlando at Advent Health, right?
Exactly.
Knowing that they can do that loan if they have a contract signed and they haven't even started yet.
Right.
Things
Yeah.
like that. Or knowing that, they need to sell. And, oh, did you know that I listened to this podcast with Angela and Colleen, just so you know, and that you can, do the buy down or offer the concession or offer the lender credit by working with her. So that's why we love working together. We're always thinking of ways, and CMG is always offering new programs.
We do. We have so many
We've
programs.
gone through
We were so
so
excited
many.
when this came out, though,
Yeah,
because we've been waiting on it for years.
I got to be honest, guys. There have been times in the past when I have worked with doctor clients, and I've gone to her and I'm like,
Yeah.
"You have any
I'm like,
doctor
"Sorry."
programs?" And she said no to me, and I had to send them to like Fifth Third Bank or
Yeah,
something.
and yeah, I've been referring them
Yeah.
out as well, because I'm very honest up front. If it's not a product that we have,
Yeah.
I want to be able to make sure that the client's taken care of. So super excited about this.
I am too. So anyway, we're here for you guys, and hopefully you'll keep tuning in, and we'll see you next time.
Thanks. Have a great day.
Bye bye. Good.
Hello.
We're keeping them short and